Good afternoon, folks. July 30th, 2018, 12:06 p.m. This is midday review. We're going to continue looking at the swing trade report that would be dated, I think it's June 24th, if I'm right, June 20th, Wednesday, June 20th. It's the report with Google, Amazon, LITE, XRT, etc., etc. So we're going to look at that today and finish off as many of those as we can, and we're also going to look at some of the movers on the day and a lot of the alarms that went off. It's a Monday, and a lot of our structured alarms went off. Basically how it works is we cover 100 equities on regular rotation in our swing trading program in 5 reports that cycle through every 5 weeks. What we're doing for earnings is we're cycling through those 100, reviewing them quick during earnings to make sure we're on top of our entries. And in the live trading room, when alarms go off on those equities, our traders can see them in the room. So I'm going to start with movers and different alarms that went off, and then I'll go to that report that I'm referencing, and we'll go from there. I'll be back in half a minute here. I guess I'll get these charts off of this monitor first. The S&P trading 280.14. It's under pressure. It has been for a few days. It's trading a low of day right now. Its main support, well, it's got the 200 MA under here. You want to watch that close. It does react to the 200 MA on the 60-minute chart. You can see here what happens. Anyway, it's got range support. So in the algorithmic model at about 278.60-ish, 200 MAs around 277.80-ish, and it's just been following this quad wall down. The target here is for August 2nd at 11 a.m. in the 278.60 range. If it gets a bounce, then you can look at this target over here, 283.75, that's August 13th. Now, volatility is up today. Today is the first day in the new timing cycle volatility that we've been publishing. If you don't know what I'm speaking to, you can look at the swing reports. You can also, where else would it be? It's on the swing reports for sure. You could search my name on Google and hashtag VIX and find the different reports. But anyway, it's a new timing cycle. We've got a report coming out tonight on that specific point. It's a big point because the timing cycles and volatility tend to line up with crypto and moves in the market. And so this is inflection week, and I wouldn't doubt that we see a number of really fantastic trading opportunities between now, the next timing cycle ends December 24th. So it's starting now, and this is the same thing that happened earlier in the year, and we just did absolutely fantastic. That report is coming out. I think Jen's going to have it done tomorrow. She had a target date for the end of the month, and it's a reconciliation of all our trades on all of our different platforms and everything that we do. It's a big thing to reconcile, but there were many hundreds of different alerts and trades and stuff. But it was fantastic. And now it got slower as we got closer to the end of this time cycle, and now we're on the other side of it. So it's inflection points, and I've even had swing trading members or even day trading members ask me, why we have machine gun trades all of a sudden, and then it'll go kind of quiet for even up to weeks, and that's the scenario. So I would expect significant trading turning here and going into Christmas. That's my point. So you know where the support is on the S&P on this intraday model, and then we've also got resistance at 283.70. The dollar, so the dollar is still in its structure. It hit that resistance pretty much perfect. One of the candles got up and over, came off. If it holds underneath that downsloping baby blue line, it's still in that structure. If it gets up over top of it and holds, then it's a daily chart, by the way. This orange structure is next. And this model was 16 months old, and it's been absolutely perfect. When everybody thought the dollar was dead, I was telling everybody, don't jump the gun. Oil. Oil got a serious jump this morning. We were actually in seminar with our coding when it happened. We were in a trade here that we flatted on, one of my first flats, I think, in months. It turned on me. You can see where it turned early this morning, and I got out. I was in under this main support resistance pivot. It turned, and then we got into seminar, and while we were in seminar, it did this. I would have caught it, but I wouldn't have caught it big because it's just, it was an odd place for it to do it. But it did do it, and I would have followed it. Now it's trending up in this channel. So this is the algorithmic channel. The thing about our algorithmic charting is it's charted in advance, so it's not charted after trade, it's charted before trade, which I call a GPS, or having the lights on when you go to war against your competitors, and they don't. Okay, so I'll get out of the oil chart for now. There's a target here for Tuesday at 10:30, a target here for, Tuesday at 4:30 in the afternoon, Wednesday at 10:30, coinciding with EIA report, and that's these are provided on the weekend, and then there's one up here for Friday. Okay, so we're going to go through a series of alarms that went off today. We're going to start with AGN. AGN was one, if you search my name on Twitter or on Google and hashtag it AGN, you find that I was putting on alerts a few weeks before the turn, and this turn has been fantastic. I called it a potential career trade. I was screaming from the rooftops about it, and it has gone absolutely perfectly according to plan. We'll take a look at the chart here. This will be fairly slow, by the way, because these models have to load, and many of these have models. So because AGN was a fairly serious setup for me, I've charted it on different time frames. I apologize. I've got really bad allergies today. Right before midday, I always bulldog out and play with him to try and tire him out, so he leaves me alone during midday. And of course, rolling around in the grass. Anyway, I've apologized for it a number of times in videos. I'm sure all of you know. So I was alerting in here somewhere, and nailed the exact date of the turn. So far, we've nailed the tight time cycles, the swing. Everything's been just, couldn't be more perfectly on. It's trending towards this target here of 18458, which was the second bullish scenario, second most bullish scenario I had for August 16th-ish. The most bullish scenario is 20356. It could definitely hit that. It's getting really close to that resistance now. I put out an alert earlier today. It got up over this support. Ads are in for resistance at 18462. So far, a smoke and trade. Now, if you're a member, keep in mind this is a tighter time frame chart. There's wider time frame charts out there. Pretty important to watch. Your main structured range support now is in the 16559 area. There is a trend line right here You might not be able to see it on your screen, but there is in your charting if you check your charting on the reports. And that's the one that we expect to channel as support, and there's one up here, and we expect that one to channel as resistance. And of course, you can follow those two lines up for your trading range and your decisions as these other diagonal downsloping lines come in. You can count those as significant resistance in your trading plan. This has been, I just can't express enough. Like if you do your search on my name and that cash tag, you'll see how absolutely crazy that call was. That was one of my biggest calls because the structure is so big, and I put my name on the line. I put my reputation on the line with it. You can see the charting I was using. Well, here, I'll just go back here. This is really important because when people ask me, you know, to validate what we're doing, which I shouldn't have to do because people could just do a search and do some homework. But I get it, the markets are noisy, but the work we're doing is not, you know, there's maybe 0.1% of the technicians in the public markets that do our work, you know, they're all dark. You can't find them. There's no reason for them to be public unless they're trying to give back a little bit like I am at this point. Some do, but anyway, I think you get the point. I'll stop the rant. So, you know, I was saying here, for example, April 26th, that the time cycle ended on June 4th. So that's, you know, what is that? That's 6 weeks notice. Yeah, so that was the first one, and I even marked it long. So we, you know, we went 147s up to 180s, mid 180s now. So I published that, and then I published this one that said AGN. I know it's psychedelic. This was public, by the way, but I think time cycle is over soon, and I had given the time cycle date in the previous. This isn't to show you, oh, you know, I'm so good, I'm right. It's to validate it for people that need validation, and in a noisy market, it's really tough. The institutional guys and the pro traders, they have no problem, you know, with this, and I'm boring them right now by even saying it, but the retail traders that are in a noisy environment, it's tough. Anyway, so then lower time frame. I even specifically said, you know, here's the trigger, the 147 if it holds. Then another public that I was long, saying I was excited for the huge time cycle conclusion. So this was on May 30th, it was ending on June 4th. Now if you look at this chart, you won't see this charting in the markets. Part of what I'm doing here is our major trade coaching event is coming up September 14th, 15th in Cabarete. That's going to be a career milestone inflection for me and our trade coaching, because between now and then our machine models are coming out. A lot of these models that you'll see in the equities are generation 1. We have on-the-fly models that will do while we're trading intraday. Then there's generation 1 through 5. The 5th generation, for example, is EPIC, the oil algorithm. And that the fifth generation have black box. Well, this particular model here, I went from nothing to a black box model. And this just gives the public hints of what the black box model is based on. It's much more complicated than this, but you just won't see this in the markets. And, you know, sure enough, it's done exactly what we've told people it's going to do. And hopefully that continues. But my point in that is that if you're listening to this video and you're just getting to know us, when you approach us, you want to approach us from a perspective that there is definitely something different here, and you want to pop that hood open just a little bit, give yourself that benefit to make a proper decision and to properly investigate, because it won't be long, and I've alluded to it and spoke to it a number of times now. It won't be long where we simply won't be available to the retail public. And we have a schedule, and that's September 14th, 15th is nearing. And if you even look at my feeds in comparison to a year ago, well, a good example is our live trading room. I think it was $100 or $150, and I think now it's $600 or $700 a month. So we've been very specific that I was going to give back what I could, and then we were going to go off into the sunset, and this is a process. Now, any of our existing members will always be able to get in there, whether or not retail in the future will or not. I'm just speaking to our actual interaction with retail, pushing it on retail and trying to get their attention that there's a much better way, a more predictable way to trade. And the evidence is, the proof is in the pudding, and we've certainly had a lot of pudding, and it gets better and better and better because our models get better and better and better. But this gives you an idea. It's not one trend line like you see on CNBC, and nothing against CNBC or any of those other people, but if you're competing with us, against us, and we're calling this bottom and what it's going to look like in the future, because we've mapped this out. This is just the structure. We've mapped this out for our members. If you're competing with us, and we know in advance with weighted probability what's going to happen, because we don't know all the time, but we know with weighted probabilities, you're just not going to win against those kind of outfits. And those kind of outfits are in the marketplace with huge liquidity. You just don't know they're there. And when I see those, and I'm almost on my rant here, but when I see those articles that say, the quant funds aren't doing well, and then you pop open the article and they talk about two that are obviously misguided funds based on their premise of their models, first of all, that is not representative of the market, and that's a lie. They're lying to you because that's what people want to hear. So what Holly Wall Street does is it sells you, it spoons up, spoon feeds, lies to you, because that's what people want to hear. They prey on your fears, and they spoon feed you what your lizard brain wants to hear, and see those bright shiny lights, the casino, bing, 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 bing. And I just went through all of that for the purpose of our trading students. These videos for the earnings season, we're going to use them as part of the outline for our upcoming trading. And that particular trade coaching event in September that you can attend online or not in person, you can, will be so significant for us that we're going to document it at great length. And from that point forward, it'll be very, very difficult to get a hold of us if you're a retail trader. You'll still be able to get into what we do, but direct access, where people message me all day or all night, and I don't mind that, but there's only so much we can do. Our machine trading is so near, and it takes so much of our time. So anyway, there's only so much we can do, and we have staff, and we have new interns, and there's so much happening. But anyway, that's AGN. So what are you watching for on AGN? You're watching for these lines. This downtrending one's going to be your resistance. This uptrending one, you can check your charts. Not going to give any specific figures here, other than there's range resistance at that 19870, and then up at 232. This is big structured resistance, 232 area, and then those intraday levels I gave you. Okay, so let's try and pick up the speed here. That's AGN. And here's an example of the channel. So we've told our traders exactly what to expect through the channel. All of this there before the turn even happened. Okay, so that's AGN. Again, it's getting really close to intraday resistance. So trims should start happening soon. intraday resistance is at 18462. It hit a high of 18356, trading at 18315. Okay, the next one, and I'll speed it up here now, ITCI. So this is intracellular. I just got to get my charts to get in gear with me here. So ITCI is the next one. So ITCI is a simple generation 1 algorithmic model based on the daily chart. When you're looking at these charts, the white arrows here, or sometimes they're different colors, are your main pivots or your main buy-sell triggers. So if trade gets up over, you add. As it gets close to the next one, you trim. Gets back over, you add. As it gets close to the next one, you trim. That ebb and flow through is where all the margin is. If you know the structure before trade gets there, you will ebb and flow. If you know how to use the models, you will ebb and flow your profit and loss to a point that the average trader can't do because they don't simply know the structure. Okay, so right now what's happening is this is a buy-sell trigger. So there's an alert out today that says that is being tested. If it gets under that and starts trending, there's the 200-day pink line. There's this quad wall, which is actually a diagonal Fibonacci trend line. They make up our quadrants. Quads, our definition of our trading quadrants is a structured area of trade that trade is likely to respond to. So if you look at this quadrant here, this diamond shape, and I remember when I first started modeling these and people would laugh at me, and specifically in the poker community, I told them what I was seeing in these charts and they just laughed. And Epic, of course, the whale algorithm was the one I was working on at the time, so I'm grinning right now because, if you Google oil algorithm, Epic is at the top of Google. In other words, Google sees it as the best. So I hope you folks that I love so much and dearly, hope you folks that laughed about it remember. Not because I'm trying to rub it in, because maybe next time you don't want to shoot yourself in the foot quite like you did last time. And it's nice to say I told you so. Just from the perspective that we've worked so damn hard. Okay, so that was 16 months ago. If you look at this diamond, you can see. So it gets up through the quad, gets into the resistance, and then boom, right up to the quad wall. You see that? Then into the target area, didn't quite get right to the middle of the target. After that, so that's the peak of the time cycle, it dumps off. And that's very typical. See how it did it here? Up into the time cycle, right into the target, shot up a little bit and dumps off. Gets up, hits the quad wall area, pops up a little bit, overbought a little bit, comes off. Why? Because the machines are out. The machines are trading these models. Why are these models so powerful? They're so powerful because this is the structure. This isn't just an MA, moving average. This just isn't a trend line. It just isn't VWAP. This just isn't pick your favorite indicator. It's the structure. Now, if you want to get fancy and put other stuff in the structure, and we've done a little bit of that here, these red lines, these horizontal red lines, these are historical support and resistance that trade most likely reacts to. We've got MAs in here, 200, 100, 50, and the 20. The other thing we've got trajectory lines that are getting into a lot of our charts that go from this potential target to this target. Now notice how trade has used that as a trend line. That's not by accident. And there'll be more on that later. we've got the timing cycles marked, the vertical green lines. Now, if it loses this mark, so this main pivot, 1973, you can target down here at 1479 on September 6th. If it bounces, you can target 2460-ish, or yeah, 2470 area, same date. That's your timing cycle right there, where that green marks it. Okay, so that's ITCI. So we're watching the test right now is what we're doing. And I apologize if I sound a little bit pissed off about having to spoon feed this out, or force it into the retail mind, or people that laughed at us in the beginning. It's coming full circle now. We're almost, we're making our way back out, and we've got this big training coming in Cabarete. So I'm trying to address everything and wrap it up in a bow and get on to bigger and better here and say, told you so. Joking around. Okay, ITCI. I'm going to get faster here. Trust me. Here we go. As fast as these charts will load anyway. So I'm going to grab the next one here. It is, I feel like a bingo announcer. Pure Storage, PSTG. So this alarmed this morning. I'll bring this one up. So this is Pure Storage, PSTG, one of my favorite stocks. It's got quite a story. I like the technology that they have. By the way, if you're using these charts and those indicators at the bottom come up like they do, just left click on your mouse twice on the field, on any field area. So I'm going to left click right now twice. And those indicators come up. The top one is your stock RSI, overbought, oversold. So it's getting near the bottom for a turn, but your MACD's high, and that's a problem. So you might get a bit of a pop here, but this is tough. But earnings are coming in 27 days and things get a little funky before earnings. And then I just left click twice, boom, I get rid of all that. Speaking of chart structure, so you can see, when you get to the end of one of these quads, or on the other side of the time cycle peak for the quad. So I'm going to highlight it so you see it really clear. See this? You can do that in any quad. See how it traded through that structure? And it used the mid, what we call mid quad or support. See how it came off at the quad walls here? Interesting how that happens, hey? So when I tell people they need to learn the structure of an instrument, this is what I'm talking about. Visual order, bring to front. Okay, so right now it's at the bottom of that quad wall. Now this particular quadrant is small. It's not the main structure. Main structure is the wider one here. Now how do we get these? Well, that's what we teach in the trade coaching, right? How to actually model your own. Your actual channel, it's a massive channel. This is the bottom of the channel here, like in a major sell-off. This is your channel bottom. Now it's very likely to hit this one first and bounce, but I mean that's reality. That's the algorithmic channel. And likewise up top here, if it got crazy to the upside, but more likely to stop here. What's really critical, and I keep hammering this home, is this is all done in advance of trade. Now, of course, the models build out and build out and build out. These trajectory lines, these are just if it's going towards that target, it's going towards that target. These are just trajectory lines to help you visualize the targets. So right now, if it fails these supports that it's at around 21.20, 21, yeah, it got down to 21.22 today. You can look below to 19.27 and trade it down. There is the 50 MA underneath. Or in a real big sell-off, 15.95. And these come in at October. So you always want to check these dates. So there's lots of time frame there. And if you're day trading this or you're looking for entries, you learn in the trade coaching how to get this down to any time frame that you want, from 1 minute, 3, 5, 15, 30, 1 hour, 2 hour, 4 hour, weekly, daily. Upside resistance now is what was previously support, a mid-quad at 2260 area. Your next intraday support is 2002, then you got a small one at 1932, another one at about 1943. So you got, a cluster in here, and it happens to be where the 50 MA is, and I wouldn't doubt that it gets into that cluster of supports and then probably bounces. Now, depending on earnings, it could end up way up top there at 29 bucks in October, very easily. That's PSTG, but it's decision to decision, and it just allows you to trim and add and trim and add and an ebb and flow. And people that tell me that they don't want to do that are simply leaving the majority of their returns on the table. The people running lazy services, swing trading services, won't tell you what I'm telling you. First of all, because they don't know how to do it. Second of all, they know how to do this. They're too lazy to. It takes massive amounts of manpower to do what we're doing. But we're doing it because our end goal is the machine trading. So we're just, distributing it to the world, so to speak, as we're developing it. But once we get to those final models, people will never see those final models. Because we have to keep our edge for us and our clients, right? Okay, PSTG, pure storage. That's what's going on with it. I'm going to have to really pick up the pace here. I keep promising every chart I'm going to look at that. G1 Therapeutics is next, GTHX. I'm in this one as a beautiful little swing. It got up into its resistance today. I got some nice trims in there. I put out an alert on the swing trading feed and the day trading feed. I will take this moment to tell you that if you're a member and you're not in the Discord private server specific to what your membership is for, you're doing yourself a disservice, because there's things that I put in there that you won't get on those alert feeds, you won't get in the newsletters. Just so you know, if you need an invite, let us know. Now those Discord servers are for bundled members, right? Okay. Look at this trajectory. So this is your most bullish target way up there. I've gone through this on videos the last few days, 58.12ish. Your next target's down is 53.62, and then slightly flat sideways 49.13. These are all for August 27th area. 44.66 in a sell-off. Its trend right now is between the two upper scenarios. And this thing, just so you know, this thing, if you look at its chart history, it can double extend fast. It can squeeze hard. That squeeze would put it in the $70 range if it did that again. Earnings are 13 days away. I wouldn't want to be short. I'm not saying it's going to be a long. I've already got profit out of this. I'm already, I can't lose in this because of stops, right? But and I've taken profit on these pops. So I trim and I add, and I trim and I add. You would add at the support, right? That 49.07 range is getting close. You start your adds, and as it gets up into resistance, you trim. And that's how we make the money, and that's why machines can do it better than us, because they're on top of it, of course, because it's automated. So that's GTHX. The next one is a funky trader. It's Snap, SNAP. I have traded it. I might have slightly lost once. I know I've been underwater on it before, but I think I've got out okay every time. I traded it 2 or 3 times in the last year. It's not an easy stock to trade, but we'll bring it up here. So the bottom line with Snap is that it's trading 12.15 intraday. It had a low of $12. It's got a mid pivot, like a mid quad support that failed today, and that support was in and around, why can't I see this very clearly, 12.32, and it's trading 12.14, so it's lost that support. But give it some room. This is a daily chart. I like to see things fail for at least the day, if not the Friday. Of course, if things move too fast, then you got to make your decision and get in or out. But you can see how sloppy this is traded lately. It's not hitting the targets. It was back over here before it dumped. The targets aren't on there anymore, but it was hitting targets. But it gaps huge up and down. It's got earnings in 8 days. It's messy, but yeah, I can't even encourage you to trade this, but it's targeting for August 8th, 994 downside. That's its highest probability. If it gets sideways, 1234 on that day. If it gets positive, first stop is 1468, that target, and second target most bullish, 1696. And there are more up top even from there, but very, very highly improbable. Watch this quad wall, support down here. It's just, we cover it in our swing trading platform. We have traders that trade it, and so I don't have a choice but to cover it. It's a going concern in the markets. It's just really tough to trade. Next one is ARWR. This one I'm off a little bit on my swing. I entered this week. Wow. ARWR, there we go. So the story behind this ARWR swing that I'm in, it was getting up over a mid quad, and I knew it was a little bit divergent on its chart trajectory. It's a daily chart. But it's been so bullish that I thought, you know what, as a 1/3 entry, it's worth a gamble. And it's not a gamble because I know the chart structure. And when you know the chart structure, you know when it turns, how to trade through it so you can get the heck back out of it, right? So you see this blue line here where my cursor is? That's been the top of the channel, but I know from an algorithmic modeling perspective, the true top of the channel is up here. It just hasn't got there. And I know the bottom is here. Now, and I know that this is the midline to that channel. How do I know that? Because we calculate the data going back on all the time frames. Anyway, it's now lost its 50 MA, which really bites. It's down 21% today. Now, it does have a structure here. I'm in 1/3 sizing. Long. You might say to yourself, well, how the heck are you going to get out? I guess it's already marked, isn't it? Well, no, it's not. So here's the structure it's in right now. Now, if it dumps into here, it's in the structure below. So here's what I do. like that. So then what I do is I trade this until, you know, I'm positive and I've got profit out of it. And I go home with my money. So right now, what are you watching? You're watching this zone to see if you get a pop. Earnings are in 8 days. So it's possible that I have to sit in a downdraft down to that $9 mark. I don't think I'm going to have to. I think it's going to end up here, but earnings are going to decide, right? How earnings don't decide, how the market responds to earnings. So your resistance now is at 1635. Your next major resistance above, which is also a target for that target date, is 2372 in a bullish scenario. And there's another one up top even higher. And in a complete dump, you can look, well, it'll never get there. Your dump target would be in that $9 range. So that's Arrowhead Pharmaceuticals, earnings in 8 days. Your next one is Alphabet or Google. So what I've done here is I've taken the larger structure and just magnified it and given the day traders, or even people that are swing trading or investing that want to get good entries and exits, I've given them some intraday levels to watch on the model. And so that's what you're going to see here. You won't see the bigger structure. You'll see a much tighter time frame. So this did alarm today because it lost this quad, but more importantly, this is an important mid pivot, the 12-11-90 range. Call it 12-12, I guess. Got really close today, so really it's a buy side as it gets close there, and then, you know, for intraday trade, you're now in this structure here. If it falls below that, then you're in this structure here. And I can't give you all the levels to watch there because time doesn't allow, but 1102.90 is your main structured support if it loses 12.12. If it holds 12.12, your main structured resistance, one is at 12.6545, and a bigger one is up here at 13.20.13. If you go back into yesterday's video or the day before, it shows you the channel and your time frames. I'm targeting for 13.20.13, October 24th or higher. There's 3 other targets up there that go to the top of the channel. This one here is most probable 14.28, 14.29, and there's 2 above that. So that's what I'm targeting. Google, in my opinion, is king. It's one that you enter and close your eyes and only return to it when you need a good entry. But we'll see. It's all determined on price. One of my favorite long-term holds, though. Next chart is HIIQ, I believe. Earnings in 2 days. Got a bounce at a real key level here today. Put an alert out on it. My apologies there. HIIQ. This thing trades really well through the model. I very rarely hold through earnings. You can assume that I'm not going to instead of messaging me. But you're welcome to message me anytime about anything you want. But the point is that you know, a stock like this, I don't hold through earnings. Google, yeah, you know, Facebook, Google, the biggers, depending on the scenario. I've been lucky the last couple of years. I don't think I've taken a hit on earnings. Don't think. Okay. HIIQ. So you see here, this is the mid quad. Hit the mid quad support today. They actually had the 100 MA with it. Boom, and right up to the next resistance. So I put an alert on this. Up over that, it targets 35.70 area, August 14th. In a dump, in a sell-off, your first is 31.15 to the downside. Your next is 26.65 on August 14th. It's got earnings in 2 days. Of course, that price action will determine everything. Your channel is way up here, though. This is what's really cool about this one. And it's hit there before. We traded this one, I'm sure. But anyway, that's your channel. So, you know, you've got a potential target there that's just huge. Just over 40, it might be about 44.50 or so. It's 44.60. But that's the most bullish scenario, which is improbable, but it can happen. So that's HIIQ. Got my eyeballs on this one real close. Okay, let's go to Facebook. This is super cool. So what Facebook is doing, if you go back to its last sell-off where we made a absolute boatload, we ebb and flowed that model, man. And again, screaming from the rooftops. Here's Facebook. Check this out. This is very, very similar. This time frame, price action, and everything, because it's selling off today again. But that happened in the last one. We kept telling people, watch, it's going to turn, it's going to turn. I mean, it has to turn. It's just simple science, simple physics. That isn't true for all stocks. Oh, look at this snap. What the heck? What the heck? Okay, snap. Oh yeah, this got mislabeled earlier today. Here we go. Here comes Facebook. Okay, so this Facebook chart is a magnified version of that bigger model. The point is, the first day of trade after the sell-off, we had this structure pegged for our members, and sure enough, there, you see the triangle. Now, if I brought up the bigger chart, but you can reference it in our reports, you'd see a much, clearer structure. This is intraday. So anyway, what was important here is today it dumped into the quad support 16750 area, got into its next 4-hour candle, and now it's dumping. What does that mean? Well, until it stops dumping, you got to be careful. But you can trade the ranges, right? So your next support, see the white arrow? Always look for these arrows. That's your next support right there. 16062. Now you have supports on the way down though too. It's trading 16720 intraday. You got support at 16453, then you got support at 16432, then at this quad wall, that's a big support. You got 16224, all the way down. There's a number of them until you get to 16055. Now, 16054 actually. Now that's not it's not a massive support. Like there's a bigger structured support here at 15353. So will I be trading those? Yes. The next structure I'll be trading. Unless it gets a turn here and never gets down there and gives me an opportunity. Upside resistance now is at your pivot at 17466-ish. You see how it reacted to the pivot here and then dropped? And your main structured resistance for this trading range is 181.70. And you've got targets on here, and you can refer to the charting and the reports for target areas. The next one is TWLO. I don't think we've covered this yet. TWLO. So TWLO, I think I'm pronouncing it right, TWLO. Trading 56.84, off just over 6% on the day. It's got earnings in 7 days. It's lost its 20 MA in its trend. It's lost its 50 MA in its trend. I was watching that 50 MA test for possible bounce. MACD is trending down on the daily. Stock RSI, stochastic RSI is trending down on the daily. And the 100 MA way underneath, right around $50.27. It's trading 56.81. The 200 MA is at 39.15. I'd really like to get an entry in this one. I wouldn't hold this through earnings myself, but I'll definitely day trade it through to earnings. This thing could very easily see that 100 MA. I don't think it will. If I had to split the difference on it between the 100 and the 50, I'd call it a 54.29 dump. I think it's got a little more, so that 54 to 54.50 range. And you can see it here actually, previous lows. Interesting play. I think there's going to be some big margin in this one, but it's got earnings coming up, so I'm watching close. And that's it. That's all I'll give you on that one. I don't have a model for it. There's your stock RSI getting close to the bottom. MACD's turned down. Squeeze momentum, which is really important, is turned down. That's TWLO. Just watching for a bounce. Next one is HCLP. So this is one that I had told folks publicly, watch out for that 200 MA on the weekly. If it gets up over that, we've got a big trade entry coming, because this is a big structure. On the weekly chart, stochastic RSI is turned up. Squeeze momentum has turned green. Stock RSI is crossed up. It is bullish. Major volume in that last week's candle. And the bulls are pressing that 200 MA on the weekly this week. Massive structure. Very, very probable this gets a double extension. So where does that put it in? I can't tell exactly because I haven't charted it out. But, looking for 30 bucks is not unreasonable. 29 bucks, basically a double. I'm really excited about this trade. That chart structure can get aggressive fast. So if we get there, I'm in a big way. Of course, I leg in, I'm not irresponsible, but I was, but I'm not now. So that's high crush, HCLP on serious watch right now. Your morning Momo, one of them, MYND. So I knew by looking at this chart that it had some structure. Oh yeah, I did save it, MYND, not P, MYND. Okay, so this was a Momo this morning. The reason I focused on this one was that it had chart structure, enough to comment to for the day traders. I wanted to take the trade on it. I just wasn't early enough on top of it. I was worried about the volume at first, and then by the time the volume came in, it was too close to this 200 MA, MYND. And it's funny because one of the market's gurus, when I started tweeting about this, followed me instantly. I thought that was really funny. Because it's not, this isn't great work. I mean, I tweeted this, right, without the indicators. What happened to this chart? Oh yeah, sorry, it's a daily I'm looking for, not weekly. On the weekly, it got up. Did you see that on the weekly chart? It hit the 50 MA and backed off. That's coinciding with the 200 MA on the daily. So, on its rise, when it was up over 90%, I tweeted, watch out, there's the 200 MA on the daily. Trim at least, right, into it. Just know it's there, because it's a hurdle that. And it came way off, and now it's making its way back right now. So we'll see if it gets up over. Nothing more than that to say about it. It's not one that I'm going to hold for any amount of time. If I do trade it, it would be a day trade. So that's MYND. I'm not going to give you too many levels on it because I don't encourage people to trade it. It's junk. CELG. No, maybe they'll prove me wrong, and so far it's junk. So June 12th, we reported on CELG. This alarmed today. Okay, so June 12th, we put out a report on this when it was getting down in here. And we expected a reversal. We got it. And now it's trading 88.49. It was trading in the mid-70s at the time. So this has been a great alerted trade through the swing trading platform. There would have been, a target there. That's a mid-quad. So the targets, are on these mid-quads. Your next target is up here if it continues at 96.01 on or about August 8th, 9th. That's a fantastic trade. It's up over its 200 MA too. This is a 60-minute chart, so it's a tighter chart. Fantastic. That's CELG. To the downside, it's got support at 86.42. It's trading 88.44. So your upside target is 96. Your support's 86.14 area. In a sell-off, 76.91 is your next major support. But it's definitely in a turn. Whether it holds a turn or not, I can't tell you. But that's the turn we're trading. And that was a fantastic alert. So I'm going to leave this one up because I need to do some work with it later on. Try and get that one updated for our members. LITE, I'm pretty sure. Yeah, I did chart this one yesterday. So I'm going to leave that one alone. Cali, I charted yesterday. XRT, that's the retail ETF. I'm going to skip over that one. I'm not going to trade it. EXP, building materials. EXP. So EXP, which is Eagle Building Materials, is trading 102.09. It's off 6% today. We don't have a full model for it, but we do have enough of a model to give you your support and resistance areas. These white arrows are your support and resistance, your buy-sell triggers. So 95.32 to the downside. It's trading 102.09 is your support. Your resistance to the upside is 118.29, and your next one above is 140.24. What's really interesting here is it did hit that resistance at 118.16 area, got up a little bit, overshot, came back down, hit the support, and now it's coiling, right? Now, the targets are there, but here's what's more important. These blue dotted lines here are quadrants, and you want to watch those close because this bottom quadrant here could get hit, and that's a trend line. If that gets held, you can trend it, all the way through. You can follow this upper trend up here for the channel top. This one's got lots of room, so it's on close watch now because it's getting close to a buy trigger, and it's bounced off that buy trigger before. So you don't want to ignore this one, but at the same time, you got to make sure you go with price, right? Okay, the next one is Fit or Fitbit. We'll take a look at this. Now I know that I'm backtracking on some of these. We're kind of all over the place, but I am getting through them all. So this was reported on June 20th, FIT or Fitbit. We had a fantastic trade in this one earlier in the year. Put out a special report on it, and man, when those special reports go out, you want to try and pay attention to them because our hit rate's really high on those if you go back and review them. So I'll give you what's really important here on Fit. So the stock RSI being at the bottom is important. That's a potential buy zone. The MACD is near the bottom, potential buy zone. The squeeze momentum indicator, it had tanked and now it's trending back up and it's almost green. Now I'll show you why. So this was our last trade in here. We had alerted it and boom, we got a double extension. It was fantastic. Now it's pretty much lost all that gain. It's got earnings in 2 days. It's under. So you want to watch this super close. Its support is 562. If it gets upside, so past that quad wall, through the 50, all its MAs, it's got an upside target of 667. That's its first stop. The next one is at 771, and it's even got two more possible. 878, and it's got an upper one here, and this isn't even drawn in. That would come in around 980. So it's got lots of room to move, like the last time we alerted it. We won't hold this through earnings, but the downside dumps. So like I said, you got that 560 area, but then underneath that you got 453. That 453 is unlikely, but possible. This is a really, really good setup. It's one of the better earnings setups I've seen. So you want to watch this super close. Intraday, you got resistance at 585, and then that same support that I spoke to before at 560 area. Intraday, if it gets up over that it's actually 590 area, 586, 590, through the quad wall. Your next resistance, fib resistance, horizontal fib is 616. Next one after that, 621. and then your MA starting at around the 630 area. I guess your 20 MAs in there too, but I don't pay much attention to the MAs. The structure is your main watch. But look at that trajectory on that last trade. So, you know, it's not something I wanted to trade, but man, that was a fantastic trade. So I'm all over this one again, and we'll see how we do. So that was on the June 20th report if you want to reference any of the charting. VFC I'd already gone through, and I don't need to look at it again. What I'm doing is I'm rehashing some that I've already looked at here, simply because there's some setups that you need to know about. Oak, O-A-K, Oak Tree Financial. So our trading story on OAK is that I had the Trump election pinned perfect. And on the other side of the election, I nailed this one really hard, and we banked. Since then, it's just been a mess. But we got a great read on this one. Now with financials getting a bit more positive action lately, it's something that you want to watch. This particular structure has, this is a daily algorithmic structure. It has resistance at the 200 MA. That's right in around 42.50. Right now it's trading at 42. It's on the other side of earnings. I don't think it's going to get down to this lower target or support at 37.20. I think there's a very good possibility that once you get through this upside 200 MA and you get through the mid quad at 43.25, that resistance and this little cluster of resistance that's in that area. Then, and there's one quick pivot here, historical pivot at 43.80. I think there's a very strong possibility that you're going to see $49 in December, late November, December. Now, it may or may not do that, but just so you know, it's there. And in a big pop, it's got, you know, a channel. This is the interesting thing about this one. This is why algorithmic modeling will beat you if you don't have the structures in front of you, because when I know that there's a channel like this up top, you know, I'll get really aggressive with these because you do hit these sometimes. Now, this is very improbable, but it's got a most bullish target at 60.90 in December. It's trading 42.05. If you look at our trades after the Trump election, man, we killed this. And it's got a fantastic structure. Anyway, that's what you want to watch for. I'm looking for a turn. I'm looking for a long over 43.20, hammering down over 43.80, an expectation of 49 for December. If that fails, it fails, and I won't be in it or, you know, get out of it. But I really like it. It's got structure. Okay, so that was oak. The next one is RSX. I'm not going to cover that one. Well, I kind of have to. I really don't have a choice because it's on the report that we're cleaning up here. And so I'll show you, I'll give you a quick visual. This is the Russian ETF. So when I reported it on this in June, it was trading 20.30, and now it's trading 21.60. It is up over its MAs. It has a hard time getting up and holding over that 200, and that's, you know, that's the structure you need with this one. It's so sloppy, right? So There's not a lot I can say about it. The MACD might turn up here, stock RSI is going up. Sure, it might hold the 200 on the next. It does respond to the 200. You see how it did it here last time. So, you know, I'm paying attention. I'm not ignoring it. But there's not much more to tell you. There's no model on it. If we get into a trade on it, we'll build a model quick. And that's how these models get built out. Because we, of course, need our trading ranges. Next one is BOFI Holdings. So here's your 60-minute on it. It's trading 39.11. It's got earnings in 8 days. It's come off a bit. Let's get a daily up here. So that run earlier this year, that was fantastic. Well, since the election. 39.11, earnings in 8 days, coming very near that 200 MA. Sure, I'll watch it on the other side of earnings for sure. The MAs all have alarmed. We don't have a model on it. And we'll see if it gets upset. If it does, I'll produce a model for you and we'll trade it. Next one, if you're following along and you want to bring up the chart, is SLCA. Okay, so this is the daily chart on SLCA. It's got earnings in 1 day. It's trading $27. It's over its 20 MA on the daily, but it's under its 50, it's 100 and 200. All I can tell you at this point is it's not a long side trade for me until it's over that 200 and has structure, and we have to build a model out. And it's not a short unless it's under that 20, and same thing there. So wait for earnings, we'll see what the price action says, and then we'll go from there. The weekly on it, let's take a quick look. So there's the weekly on it. So it's right in the bottom of its range. I wouldn't doubt it gets a pop here, but we'll see. May end up trading this one. I think SLCA may have been one of my losses this year. I didn't have a lot of losses, but the first half of the year, but I did have some, or was it late last year? GREK. So this is the Greek ETF. You know, some of these have been just disaster to try and get entries into. The next report after this report is got lots of equities that I really am keenly watching. But we're going to clean this one up here. Okay, GREK, come on, talk to me. Boy, oh boy, oh boy. I gotta go here in a couple minutes. I've got folks waiting for me. They've been waiting for me since 1 o'clock, but Why is this not working? Oh, it's because we've got so many charts now running. It's just been loading heavy since. Why is it just bringing up trading ideas? Okay, I gotta redo this. Ideas published. And then we go back to TradingView. Sometimes TradingView's platform, well, I can't blame it on TradingView this time. There's so much running here now. By the time we get to the, because all of the charts that I've loaded through this midday so far, they're all being alarmed and charted here in the background. And then we've had, we've got the 6 monitors, 6 computers that have 20 or 30 windows up each, and or tabs open, not windows but tabs open with charting. It's a fair amount of a load for 100 Mbps download speed. Okay, GREK, there's your weekly. That's what I wanted to show you. I did all that just to show you this. Trading 923. It's under 200 MA. The 200 MA has been resistance all the way through. Until it gets above that 200 MA, there's nothing I can do with it. It's just dead. Dead money. And that's it for that report. So actually, it's a pretty good timing. I had to go anyway. So this will be the first thing I get out tonight. I also still have a few videos from last week to get out. I've got the day trade on Riot from last week, because that one was executed so precisely. I want to get out a how-to on that trade. So I want to get that out tonight. I want to get this video out tonight. And I also want to get, we had an oil trade last week I want to get out the details on, because we were, it was highly technical, and it went exactly according to plan, and there's lots of learning information in there for our oil traders. So thanks for with me today. I know I sound a bit tired, because I'm exhausted. I've been up for a few days. I haven't got a whole lot of sleep. But I do have some folks waiting for me right outside my window right now that are excited about going to visit possibly some sharks. I say that jokingly, because like the chances of us running into sharks are very slim. But nonetheless, we're going for a dive, and it'll be a good wake up for me. And I'll get the stuff out tonight. I promise you. Talk to you soon. Thanks again. Bye bye.